Let it be. I don't know what they done told you. Don't let them fold you. Keep it the letter G. Humble yourself with the patience. You got a pace to get where you wanna be. All the pain just show that you seasoned. Gotta believe it. Just give me the cheat code. And none of the struggles come with the glory. Tell them to keep those. All of the pain just come with the game. I treat them like free throws. All of the evil sticking around. I had to delete those. Yeah, I had to defeat those. Just give me the cheat code.
What's going on, man? I was over here grooving to that Cheat Code anthem. I love hearing that. Let me make sure I don't miss anybody in the chat. But today's masterclass is going to be going over how to chart and trade support and resistance. What's up, good people? Hey, now we are here. Let's go. Y'all are live up in here. Cool. So today's masterclass, we had a quick clip on Instagram. So if you go there, you can kind of get a short lesson on it, but I wanted to really dive deeper into looking at supports and resistance. I have ARKK up here because I wanted to show you all an example of how you can use ETFs to also chart supports and resistances depending on what you're trading. So if you got any questions, just drop them in the chat and I'll make sure to kind of go back and forth to check the chat. But I want to start with one of my number one tickers is the SPY. All right, so right now I'll delete this trend line so you don't see it for now, and then we'll go to the daily. All right, let me make sure I don't have any questions. Cool, we're good. Okay, all right, so when you're looking at the SPY or when you're charting support and resistance, you want to use larger time frames. So right now I'm using the daily chart. And we're going to, when you're looking at the daily chart, there's a couple different ways you can do this. You can either use diagonal lines, right, where you can say, hey, I want to actually chart. Let's see, I can go back and pull up these tools. Just a trend line. I wanted to do an extended one because you want it to continue to follow this trend. So we're going to use this extended line from this peak to the last time we, you can see that we have an intersection here. We have an intersection here. We have an intersection here. So, you can put it on this peak here if you want to raise it up a bit, but we'll keep it to where it was and just say on this particular peak touching both of these here, leave it right there. That way we have this reversal right here, reversal right here, reversal right here. That is you charting a, let me stop. Let me delete that. Let me go back here. But that's charting a major trend line, right? So when you're using larger time frames, you want to see if there's some type of trend that you can see. And that line may be horizontal or it could be diagonal. You're just trying to see big picture what's going on with the price. Now, let me make sure I don't have any questions. Cool, no questions. So when we're using this larger time frame, you also want to pay attention to what is happening around this line that we've charted here. So now that we know from the peak of when we came into 2022 to where we've been rejecting the entire year, right? What was going on around that line, right? What were the indicators doing? Right here, we weren't that high. We were just a little in the middle, but we found a low here, bounced up out of here, and came right back to the same trend line, right? This became higher and higher, right? Next time we came to this trend line, it was even higher here, okay? So we want to pay attention to these key types of things that are happening around these particular trend lines because they're going to tell us a lot about whether we need to be bullish or bearish, okay? And if you didn't know, I'm using the Cheat Code Algo right here. If you don't have the Cheat Code Algo, go to cheatcode.com, okay? But here's our reversal bands as well. So as we do have this trend line here, our reversal bands can kind of show you where it's going to find support to kind of bounce up out of these areas of where we have more demand, right? So when we're going up, we run into a high supply and it's got to give some of that up, right? And like I said, these signals will let you know as we approach this trend line. You can see here we're high again here. As we have come to these reversal bands, you can see we're pretty low on these indicators, right? So the same thing when you come out of this support, you're going to run into this resistance. Again, we're high here, but we're a bit in the middle, right? I mean, there's still some upside here. And when you look at where we are on this trend line, like once you've charted a larger time frame, you can then move to smaller time frame. So we're looking in 4 hour to see where we right now. And is the market trying to close over this? As of right now, it's pulling back, which cheat code is saying we got a stop loss here at 392, right? So there could be a pullback to there to test this, or we could go ahead and try to rally back to this trend line here, which is around like 400 basically. Basically, the S&P could rally to about 400, maybe try to reclaim and run up to this 401, right? So that's something you want to just pay attention to as we're right here, because the cheat code can kind of give you these levels. That way you're not guessing and you're cheating, okay? Much love. I appreciate the love. Okay, just wanted to make sure I didn't have any questions. Now, once you've charted that on a larger time frame, we have big picture what's going on, right? Now, what we want to know, right, since we know that it comes high and then it runs into the trend line and rejects, now we want to use some horizontal trend lines. And if you've noticed, I mean, it's not a huge fact or point here, but I do not use a line chart. Some people may use a line chart. I particularly do not use a line chart. I love to use Cheat Code Algo, so I like to have candles because candles tell me a whole story. Okay, so when I use candles, it's going to tell me everything I need to know. Like this particular candle showed me that we were really low this day, but the market pulled us back up to close, right? So that can tell you, hey, even though we dropped really low here today, the market pulled it back up so it can rally into what we see here, right? And so that's going to tell me a huge story if I see low on these indicators triggering a lot. This day in particular, it pulled so low, but then closed really almost close to where it opened, right? And that lets you know that, all right, the market's ready to rally. It loves these low prices and it wants to give that up. With a line chart, you can't see that type of information, right? So I prefer candles over lines, but I digress. But we're going to use a horizontal line now to chart really where we see some demand, right? So right now I see that this we'll say 375 just to play it safe is a key level, right? Now, why would I say that? Well, one, we see a lot of consolidation here. This wick touched it. We saw, but I mean, key, you can even say there's a supply zone, right? Or this is the demand zone. So we'll say the next line that we're going to use is, let's see here, say 380. Okay. So between these particular areas, there is a demand, right? We notice that when it comes in here, it really consolidates and either breaks out or breaks under, but comes back and consolidates, breaks under, comes back, tries to really consolidate in this area. So we know this 380 to 375 is a key level for the SPY, right? Now that you have that, you want to say, how low can it go? Well, we know it's gone as low as 350 here. So once we chart that, we at least know that if we get rejected here, we will most likely come back to this area, which Cheat Code is already showing you. That's why I say, you know, if you don't know this stuff or you can't chart it or you find it hard to do, you can get the Cheat Code Algo and you can stop guessing and start cheating. But like I said, I digress. But we know here there's a lot of demand that really comes into the market in this 380 to 375 that can either push it up or it can break it down. But we know it's been as low as 350. All right. And if you want to really create a zone out of here, you can put another horizontal line to say that at least around 360, right, it gets some help, right? So if you come in and you're like, oh, I'm bullish at 360, cool. Well, the worst that could happen is we drop down to this 350, but you can see this large caution candle. Like I said, the candle tells you so much information here that, hey, the market came down here, literally opened, fell as low as down here, but opened here and rallied to close. Okay. So, and like I said, when you start seeing signals like here, when you're really down in these lows on indicators, that's showing you support here, right? Not to mention you got the reversal band. So this is really how you would chart support and resistance on larger time frames. As a patient trader, it would be best to wait on opportunities when you see that there's a support or resistance, right? And so when you're using larger time frames, if you're bearish, we'll come into the market when you see that there's resistance. Because like, let's add some horizontal lines here as well. Because let's see, let's say 410. 410 is a key resistance. The market really can't seem to really get over that even from the past, right? I mean, you can see it consolidated here for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. and then fell and just completely collapsed. I mean, this looked bloody. This was June. So really broke up here, consolidated, broke up, ran into the Mayweather trend line, got knocked out right back down here. It came back to this key level and broke out, came back to this area that we charted here, and then bounced back up to get rejected at 310. So we know even if we reclaim this here Mayweather trend line, we're going to have a lot of trouble at 410, right? And so that's your big picture right here. So if you're a bear, you can say that I can be, the probability of my trade really coming in on puts is higher the closer we get to this trend line. And you can have a stop loss to say, hey, if it breaks over 400, I'm out of this put because I know it may rally to 410 and then get rejected. Who knows, right? So this is how you would chart this if you're looking at larger time frames. And if you want to trade on smaller time frames, you can then drop down to those smaller time frames and figure out what is going on within here. Because you can see that even on a smaller time frame, that these are still respected areas, right? It consolidated in this little demand zone that we had, popped up out of here, but ran right into that trend line and got rejected, right? Tried to catch this trend cloud, ran right back into this trend line and got rejected, right? And the same thing here and here. So these lines come in handy because you can see if you're bearish, perfect time to come in when you're at this resistance that you've charted on the daily. Right. And so it's not so much about using smaller time frames, yet having the patience to wait on better opportunities for a higher probability trade. Instead of trying to trade every day, right? You're in the middle. You don't know what can go on. It can come back to this demand zone or run into rejection. I don't know what it can do here on these days, right? I would rather try to build positions here so that I can be more confident in just taking profits and setting stop losses as we come higher and not trying to figure out an entry in here, right? So it's all about patience. Let me make sure I don't have any questions. Cool, we're good. No questions. But time frames, and just stay patient for the best opportunities where you can find higher probability trades. So now that we've got that charted, if you don't really know how to use all of these, you can get rid of all of this, right? And let's go back to the daily. Even if you don't really know how to do trend lines and that's still a little complicated and you just find it a little more difficult, you can go into the cheat code settings and then turn on I'm going to turn off the trade, and then I'm going to turn on my Fibonacci here. Okay. Fibonacci levels, show these levels, turn it on. It's going to plot that for you. Right. And so when we look at the daily, you can see that we're a bit running into the higher Fibonacci levels, right? So you can see that we're running into this exhaustion. So if you're not really sure of support and resistance, well, you can bet your bottom dollar that this isn't necessarily the best area to be, investing in assets in the S&P 500 if you know that the Fibonacci is saying that we're kind of at the top, right? But on this side, on the support levels, right, same thing here. You can see that if we got 343 on the bottom, and we've got this 358, 367, you can see that this is a higher probability of demand here, and you've got more supply in these areas, right? You've got a lot more weakness and selling up here and a lot more demand to be bullish here, and being patient on the indicators to let you know how to do that as well. So, or when to be reactive on these particular areas. And these caution candles and hinders and buy signals and everything will kind of be in addition to that as well to help you. And if you turn on your squeeze, you can actually go into the settings to turn on divergences as well. So that being regular and hidden, both bullish and bearish. So you can add those so you can know when there's going to be some type of divergence coming in. And when you can see this signal here, and then you have your divergence coming in and the swing signals with that as well, and you're at this low on your Fibonacci's, you can be, it's like, oh my God, you wake up and they're like, the market fell 6% today, the lowest since March 2022. You come in and you're like, well, is this a good time to buy them? So fearful, you can turn on these indicators and use technical analysis to say, hey, I can feel more comfortable here than trying to buy here, right? Because I know that there's going to be a lot more supply and a lot more selling in this area and weakness versus when I see my indicators low and I'm low on my Fibonacci's. And you can use the Fibonacci's on any level, right? So, if you, like I said, you can also use this to help you chart your supports and resistance as well. because you can see how it kind of creates a little consolidation in this range, breaks out, up, runs into this resistance, comes back, finds trend cloud, runs up, consolidates, and breaks through, right? So you can see how all of these Fibonacci levels are respected in here as well, right? So it's key for you to use these as well. If you're not comfortable with setting your own trend lines, or if you don't even know how to set Fibonacci. I think one of my biggest problems was understanding where to plot the Fibonacci, but Cheat Code does it for you. So you can do that in the settings here. Now, another cool thing I like to use is the cheat candles. When you turn on the cheat candles, it kind of takes out the noise of the candles and just lets you know, hey, this is the overall trend of this, right? So when you're using the cheat candles, you can actually kind of just come in and plot these supports and resistances a lot easier, because you don't really have to worry about trying to read the wicks or anything. You can just come in and say, okay, I see that there's a lot of, comes up, breaks through, comes back up, rejects off of this, breaks through it, comes back, finds support here. And that's another thing that you got to understand. Your supports and resistances are always going to be constantly changing, right? Because what was resistance here became support right here. So a lot of times your old resistance and what the market is trying to break through will become support after the market breaks through those levels. So that's why it's always patient, that you don't have to have so much FOMO when things are happening here, because wherever it broke out from, it will most likely come back there, right? And not only once, but twice. And if you look in the past, it's done it again. And if we keep moving this line here, we're always going to be able to see some type of price movement, even just as far back as here in 2021, right? Where it was trying to find its resistance, broke over, it came back for support, broke over this, found support, and rallied into 2022 or the rest of 2021, and then came on back down in 2022. So that's why it's always important to just be patient in the market. Those prices will always get better and always come back to you. So be patient for that. But I always recommend using the cheat code candles if you want a more clean look at what the candles are doing and where the trend is heading. But if you are a day trader or a scalper, let's say you plotted these larger time frames, right? Let's see where we also have a little bit of demand on the daily. If you're a scalper or a day trader, you also want to come in and look at these median levels as well, right? Because I can see here around, say, 390. It comes in, kind of consolidates here, comes back, totally rejected this area, but still consolidated here. This is a key level as well. So, right, once you see that it's just consolidating in this range, well, cool. It infinitely makes day trading better for you, because you now know what it does in the day, right? So now that we've plotted those ranges, you can look something as small as an hourly chart and say, okay, if you want to be bullish one day, right, it's better for you to come in when we're down here, right? And if you want to be bearish, we'll wait until build a position as we ride up higher here, but use additional levels if you're going to use smaller time frames, because you can see here around 400, that's a psychological resistance, right? So if we break over 400, you can be bearish here, right? But I mean, that's not financial advice, but that's just saying, if you're looking at these charts, you can see what happens after we reach over 405, right? It just completely comes back down. Like, it just doesn't even last up here, right? So the quicker your trades are, the smaller time frames you use. I don't chart on anything really lower than an hour. Like, for the hourly chart, I feel like that's where I can get the better picture on whether I need to be bullish or bearish in a day, right? So I can be more bullish in these types of areas, right? Especially on a day like this, where your hourly chart is sending all kinds of signals telling you we're oversold, right? So I can find a better probability trade here, take some profits, let it set up again, go ahead and take that trade again, right? And these are different days. So that lets you know that, hey, we just came back for another entry. Cool. This is the start of the market. I'm so bullish here, right? So that way, like, when you use larger time frames to plot your support and resistance, you don't have to worry about creating so many lines all up in this. Just wait for it to come here for you, right? If you want to be a day trader or a scalper, wait for better opportunities, because if you know that this was resistance and we broke over it to run into a resistance, your next support is going to be better found in this particular area, right? Your squeeze is low, your swing is heading low, right? Cool. Let's be bullish on this day. All right, cool. I'm gonna ride it up, but I can't go any higher. I can't be any more bullish here, right? So, and the same thing here, we getting rejection. So that way you can use smaller time frames. But personally, I don't use anything lower than a 1 hour chart to plot something, right? But the only time I use, say, a 15-minute is if I'm looking for a precise entry, right? If I say that, all right, there is a lot of price around here, but where exactly can I get the best bullish entry, right? Okay, well, at 387.50, it looks like, yeah, 387.50, that's where I can be more bullish, right? Like you can come in here and say, okay, there's a finite view to say that if it comes in this range, I'm going to be bullish, right? And that's not to say coming up, right? Because if it comes back to this range, it's going to consolidate and most likely break down. Well, it depends on what's going on here as well. You need that, right? Because you can see we're riding high on your 15 minutes. So if you're a scalper or something, and these are all lines that we've used on larger time frames, right? And so if you're a scalper or something, use your 15-minute and say, cool, I'm going to be, oh man, this bullish opportunity is setting up for me here. Let me start building my position. I'm confident. My swing is now signaled. I just got to have patience now and enough time on my contracts if you're trading options, right? And then when you've reached your high up and you're back over your resistance, take profits. Let's get out of this trade. That was awesome, right? So, and you can see, and if now you're bearish, here's your opportunity. The thing broke, it completely collapsed. It literally gaps down because it had no support here, right? This is all supply. So that's why I say just, use much larger time frames so that you're not sitting here trying to chart every line, because every line is not important. And it doesn't need to be so complicated. You can see that my chart is extremely simple. And that way you can trade with a lot more confidence. Just wanted to make sure I don't have any questions. If y'all got questions, drop them in the comments. I don't want to make this too long. I want to keep this short. But I wanted to show you all one more thing that you can pay attention to. Now you know how to chart support and resistance. Even when we look back on the daily chart, you can see we wouldn't have charted all those lines because technically we don't need them, right? I would get rid of this and I would get rid of that. The only reason why we would need infinitely more lines is if we were looking for finite entries where you use smaller time frames. But on a bigger trend or a bigger picture, I can just use this for my daily and say that, cool, I'll build positions in short ETFs here and wait for this come up. Boom, comes up, you take profits here, right? And then in this position, I meant bullish ETFs. Build your positions in bullish ETFs, waiting for the come up, right? And take profits when you're up here, right? You're running into resistance. Now you can, as we consolidate here, you can use this area to, I don't know, build puts or bearish ETF positions, right? Because it's not just going to come down, right? It could come in here, consolidate, get break up, have a day like this where it broke over it. But we know that on the big picture, if we used our daily chart and we have also our trend line here, that's horizontal, not horizontal, but diagonal. Hold on, let me use the extended. We can come from here to say here. And then when we zoom in on this, now that we have the big picture trend line, we can see that, hey, worst case scenario, we need to put stop losses here. If it breaks over 405, well, you're even more confident and bearish, right? Because as it goes higher than this, it gets more exhausted here. And we can see what happens when it gets exhausted, completely collapse, right? Comes up here, completely collapse, right? So the higher this goes, the more bearish you can be, right? Because you can be more confident in your trade as it moves into this area, because this is your sweet spot, right? Now, if you're a bull, your sweet spot's down here, right? Or whenever you can find some lows like this on your indicators, right? So use these major supports and resistances to give you more confidence and higher probability trades, so you know when to be bullish or bearish, and more confident in building a position that you can actually make more money on, and not just trying to make 10, 20% here and there, but actually like 100% just off of just building a position, or maybe even 300. or 30%. Even if you had $10,000, if you build a position like that, 30%, you can get that out of some type of trade. That's $3,000 made just off of patience, right? So it gives you more confidence when you can trade like that. Appreciate y'all, young fellas. I've learned so much in the last week. Trading, nice. It's really not that difficult to understand. It's really not. We are not sending rockets into space. We are not birthing babies. The stock market is all about greed and fear, right? It's two emotions. And I've learned that greed or fear pays a lot quicker than greed, right? So I actually enjoy being bearish. So that's why I chart these types of things so I can find where that weakness is in the market and completely capitalize on these days where it just collapses, right? I mean, you'll see more larger red candles than you do the green, right? The greens, you got to have, you got to have a lot of people with a lot of, a lot of grit to really be greedy, right, in the market, unless you're down here where you can see larger greed candles, right? But when we're up here, you have gaps down. Like, look at this. This is the gap down. Like, this is a payday for bears. And I mean, it just continues to gap down, gaps down, right? So, I mean, and look at this, fear completely gapping here. So fear pays a lot quicker than greed. People are a lot quicker to sell than they are to buy, okay? So I always tell people, learn how to trade so that you can learn how to profit on both sides of the market, because I don't want you to be somebody that's just sitting around and saying that, well, the market's not doing good this year, so I guess I just won't make any money, but I'll just keep buying. Like, no, that's not how you make money, right? You need to protect the investments that you've made by all costs, and that's through risk management and understanding how to profit on both sides of the market, right? So let's see, where did you start that trend line from? That trend line, this major trend line, was from the peak of 2021, or really to 2022, right? Yeah, January 5th of 2022 was the peak of this rally. Now, if we use a weekly chart, we don't have to deal with so much data. You can just see it on a smaller scale, right? You can see this was the peak here. Even if I did it on the weekly, right? Like if I just used the weekly to chart this big old trend here, you can take it at the tip of this wick and watch those other wicks, right? And just say, all right, on these particular wicks, we had a lot of, we touched right there, we touched right here, and we rejected there. So you can put that there, and then when you come back to the daily, let's see. Same thing here. I mean, the market's literally just running right into that line and just getting slapped back. I mean, and it's trying its best to really break over this. So that's why right now 400 is just like a psychological number for the SPY, and that being, I get 4,000 for the SPX. Because I charted this as well to show you all the same thing. Now we can put that trend line. This is about the major supports and resistances that we see on the S&P 500, which is the SPX. But you can do that same trend line here and say from the peak here to the peaks that we have from these candles, right? Let's see, boom. And you can see that right now we're literally just running straight smack into that thing. Right here, we ran into it. Right here, we ran into it. Tried to reclaim it. And that's why I said, March is the month in which things get worse, right? Like March is the month that this rally is leading up to. So I'm not so bearish that I'm just like all in, it's going to drop. No, because I feel like it could rally even into February. Just maybe the sales events that we have from Valentine's Day, and we might have a good jobs report or something. Or a bad one. You never know. I don't know. But those dates you need to pay attention to. If you go to the Instagram, I posted those there. But there's some dates coming up. Even with the Fed interest rate coming on February 1st, there could be some good news. Jay Powell could really fuel the market to continue this rally, to drive this higher, to create better opportunities for bears and cheaper prices for puts. You know what I mean? So that's why it's all about being patient, right? Because it could run into this line and it could reject it, or it could run into this line and completely reclaim it to rally to 410 or 4,100 on the 4,100 on the SPX. So that's why I say it's important for you to plot these levels, because this is a key level. Because if it can't reclaim this line here, then we are obviously going back down, right? And if you want to know where, look left, right? Our next level here, we can do this horizontal line just so we can plot that too. We see that we've got some demand around this 3,900 area. So 390 for the SPY. You can see it kind of reclaims here, caution candle rallies up. Comes here, reclaims, caution candle rallies up. Comes here, breaks down, comes resistance now, right? Caution candle sell, resistance. Oh, it breaks over, rallies up, uses it for support, rallies again, comes back, breaks through, consolidate, uses this again. So like I said, it could even, it could sit here and go sideways just this way, right? It's important for you to have these levels plotted so you can watch this play out, so you can allow yourself to build better opportunities for higher probability trades, right? So great class. Thank you. No problem. I got you. Now, before I go, I want to show you one more thing. So when you're watching the S&P 500, so it's great for us to know what's going on here, right? So now that we know what's going on with the S&P 500, you can also use ETFs that are the inverses to them to see that, okay, well, if the S&P 500 is at resistance, right, well, the inverse should be its support, right? Because it's the inverse. If the S&P 500 goes up, the inverse goes down. If the S&P 500 goes up, this comes down. If the S&P 500 plans to go down, this goes up. So that's why it's important to not only plot what you're trading, but find something that's the inverse of that, right? Now, like if you trade Apple, right? Apple isn't, I don't know if there's a direct inverse to Apple, right? But you can use the S&P 500 just the same, right? Because even if, let's say you trade Apple, let's take a look at Apple. Right? I guarantee you Apple's probably got the same major trend line of rejection. Well, not so much. Apple had a pretty strong 2022 on this little rally. But even if you use the extended line here and you plotted this and said, where is it getting rejected? Okay, cool. Now that you've plotted your Apple one, cool. Well, Apple's at its major trend line too, because it got rejected here. It tried to come up here and it got rejected here again. Right. So we know that this is a major trend line for Apple on the daily, and it's right there. Right. And so if we know that Apple, and you can actually see Cheat Code moving right now, this candle just moved. It's a day chart and you can see it changing, but it's a day chart. So this is a much larger picture. You're not going to see some instant moving because it is just the day chart. But you can see that Apple is really trying to reclaim this, even trying to close up here. But we've come as low as down here, but sending it right back up here to this resistance. So like I said, even if you trade Apple, you can use the S&P 500 to track that as well, because you can see the S&P 500 is doing the same thing, really trying to close up closer to this resistance. But like I said, it really doesn't have much room. If you're a bull, this is all the space you got, versus bears have so much room. You know what I mean? There's just a lot of opportunity down here versus how much opportunity is even left up here based on history, right? So be patient out there. Use these inverse ETFs as well, because if the market is running into resistance and these are coming to support, you want to pay attention to these types of things. But not only inverse ETFs, you can also use the dollar. The dollar is the inverse to the market, DXY. The dollar is also the inverse to the market, which has also been falling to a key level of support, right? So we saw here it broke over this, came resistance here, found support here, caution candle, rallied up. Like I said, not only are you looking at the buy and sells here, make sure you're paying attention to these indicators as well, because just because there's a sale here doesn't mean that it cannot continue, right? You want to make sure these are giving you signals as well to say that, okay, I can be patient here if I'm bearish, right? And I can be a lot more bullish here if I'm a bull, right? And you allow this to rally up. Like I said, that broke this old resistance, became new support here, right? Found some consolidation, broke through. Where is it going to go? Of course, back to where it found support last time, here. Now, you can see here, our indicator, the swing is lower than it's been. I'm just looking back to March 2022. So this is only a year, but still, even beyond a year, it's still lower than it has been in quite some time, which means that it's only a matter of time before it comes up out of this area, right, to rally up, this is an inverse to the market. So if this goes up, stocks go down. Now, another inverse to the market would be the VIX, right? The VIX measures the volatility in the market. When this goes down below 20, it's not a great time to be buying assets, because essentially you are buying with just knowing that there's volatility coming, right? Just to give you an example, September was a horrible month, right? And look at where the VIX was right before September, right? So it rallied on up to bring on stocks down for September, right? So this is the best place to buy stocks when it rallies over 30 and into 35. And this right here is a demand zone for stocks, but it's a supply zone for bonds and the dollar, because once this starts to go down, then the dollar goes down, bonds go down. So that's why it's always key to watch these types of inverses, to chart them as well, because it increases the probability of your trade if you're trying to be bullish or bearish. Like coming and watching this, it helps you know these are like barometers for the market. Like, are we hot or are we cold? Like, are we bullish or are we bearish? Are we feeling greedy or are we fearful? Right? These things tell you this. Just watch these. So you got the inverse ETFs. The one particularly that I follow is the bearish one for the S&P 500. It's the XPXU. And then you have the DXY, which is the dollar. And then you have the VIX, which is the inverse. Now, if you want to watch something that goes with the market, you can watch gold. Gold goes with the market. So as gold approaches its resistance, right? So if you're like, well, dang, I need to know where to buy some gold. How high can it go? Well, look to the left. You don't need a crystal ball. Just look to the left, right? Right here at about 1975, we saw it had a lot of resistance, but another key level here is this little area consolidation, right? So if we draw another line here on gold, let's say 1930, right? Or we can just say 1920 to play it safe, right? This is an area where literally gold just can't stand. It just can't last up here, right? And you can go back to, these lines are always respected from the past. We just charted them just from where we were looking, and look at how much they respected even in the past, right? Consolidation, broke through, tried to use it for, ran into resistance here, couldn't make it, blasted through, rejected it, right? Came back to these, look at this. That's why, these lines I charted from the total right side, but we're seeing them to the left. That's why I say, anytime you want to know where something has been or where it's going to go, look left. You don't need a crystal ball. You don't need a guru, okay? All they're doing is looking left too. We're just out here all making speculations. And right now, I'm going to tell you that gold is high. And like I said, if you aren't comfortable with using these lines as well, you can come into the cheat code, turn on your Fibonacci and say, is now a good time to buy gold? Well, let me turn on the Fibonacci and see what it says. And when you turn on the Fibonacci, we're running high. We're running hot right now, right? So maybe it's better to come closer down here, right? Like this is a miracle price, but this is a better demand zone, right? But we got a lot of supply up here, right? And we're going to have some people taking some profits on gold, right? So that's why I say, if you don't even know how to plot the lines, you can use Fibonacci levels as well. With the cheat code, it does it automatically for you. Also use these indicators, the squeeze and the swing. You can see we're high here, and you can already, look what happens when we're high, okay? We come on down, all right? And it's like a bearish down too, right? It's like I'm gonna let it bleed out, and then I'm gonna give you some hope, and then I'm gonna just ruin your entire year, right? Oh, and you thought it was hope? No, I'm going to take you even lower. And then buy, demand, right? We're low. Let's catch this rally on gold, right? But right now, gold's overextended and so is the market. So use these support and resistance levels to know when to be bullish and bearish and how to become a better investor and trader. Let's see here. We got any questions? Great class. Thank you. Thank you for the free game all day. I appreciate you all attending. Share this with a friend. Tell somebody to tell somebody and tell them to tell somebody else, because everybody needs this information. It has completely changed my life. Cheat Code has just been a game changer for me. Using the Cheat Code Algo really just helped me to essentially start cheating. Like, I remember when I first got the Cheat Code Algo, I didn't want to tell anybody because, like, the stock market is an exchange, right? So in order for me to win, somebody got to lose. And I was like, if I help more people to win, ain't nobody gonna be able to lose. And if I keep cheating and I tell other people how to cheat, how I'm gonna win? Because then we all cheating, and like then they got to change the game. You know what I mean? So like, but tell people about it, because I feel like it's enough people that they will probably never see this video, and hopefully they know what to do. And if they don't, I'm gonna take their money, and you can too. Even it sounds bad, but it's an exchange. Somebody's got to lose for us to win. Okay, so don't be on the wrong side of any trade. All right, so be patient, wait for the right trades to come to you. Use the cheat code algo. We got some bundles right now with our 3 masterclasses. You can get the crypto, forex, and stops and options with our cheat code algo for a year, and also 1 year of the live trading community. And that's live streams daily. You got mindset classes. You got lounges where we just do pop-ups. You got a live trading community where we're literally sharing trade ideas. Plus, you get trade alerts in the community. It's just next level. If you're not in it, you should be. Go to shop.cheatcode.com. If you need the link, just drop us a comment and I'll send the link to you. But find us on IG at cheatcode.tv as well. We're always posting content there, and we're always doing live streams as well. So don't miss out on any free classes. If you want a link to join for free, just comment below and we can send you that as well. Go to our IG, drop us a comment and say, hey, I want, a free link. Ladies Lounge too. The Ladies Lounge is so dope. We even have a community for our ladies. And because it's really cool for them to have a space where they can learn together. And it's just awesome seeing that. Obviously I can't like really sit in, but I go for the content of it. But to see that in action is cool. So ladies, if you're not feeling confident about your trades, or you want to learn from your other peers, this is a great place to do that. We have a Ladies Lounge one coming up, I believe this Sunday as well. So definitely, or it's Saturday or Sunday. Let me check the calendar. Let me see. But definitely join our community. We will see you all on the inside. This has been amazing. If you got any questions, drop them in the comments. If you need a link, just let us know, and we'll see you for the next one. Share this with a friend, okay?